Hello and welcome everyone to Silver Asset of the Day for the 18th of March 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So we've had the FOMC statement this week. We have in fact now seen the first interest rate hike in 8 years by the Federal Reserve. And with that, we have seen that slingshot move higher on commodities. In fact, on Thursday, energy prices rallied over 9% to the upside. Crude oil and Brent crude oil, we've in fact banked very fast windfall amount of profit on both trades, executed positions just after Wednesday's FOMC statement with our clients within the matter of 30 minutes after that statement. Those trades, in fact, alongside a position on copper, they banked us 1,940 points profit in under 24 hours. So of course, for that calculation, every one lot contract that you would be trading, that's $19,000 of profit. Every 10 lot contract that you would be trading, that's 190,000 US dollars of profit. Did you make any money on the FOMC statement? Did you take advantage of the dip lower that we've seen on the metals and the energies? Very fast profits to be had if you know what you're doing and you know how to interpret that FOMC statement. We mentioned to you on Tuesday's Gold Asset of the Day, look at opportunities on gold at the 1900 level. Gold prices just a week ago, they broke out to all-time highs at 2,070 US dollars per ounce. Subsequently, they've broken all the way down to the 1894 level, almost a 2,000 point correction to the downside. This gave you a massive opportunity to buy back in at the lower end of the recent range there, just around that 1900 zone, in order to capitalize on that slingshot move higher that we got after the FOMC statement, with gold breaking back out to 1,950 US dollars per ounce. In fact, over the last 24 hours, we've added 3 positions on gold and 3 positions on platinum, alongside our trades on the energies here and of course copper as well, which have all had massive moves over the last 24 hours following on from the FOMC statement. So as it relates specifically to silver, silver broke out over 1% following on from the statement. We've seen silver prices break back above 25 US dollars per ounce. It's very similar to our expectation here on gold. I'm looking for another run up back towards the swing highs as we progress between now and the end of March and into April. We are fully in this commodity super cycle. We are capitalizing via the energies, via the metals. Agricultural markets are on an absolute tear over this year. We've seen many commodities breaking out to all-time record highs. Nothing has changed. We are looking to capitalize on these dips, on these corrections, to build back our position. In fact, we've executed over 10 trades since the correction that we got at the end of last week, beginning of this week, building new positions out after we already booked a windfall amount of profit on commodities as they went parabolic last week, breaking out to all-time highs, and as they continue to go exponential. But we warned you about the profit taking we would get in the lead up to the European Central Bank announcement, in the lead up to the FOMC statement, and of course all of that has played out and given you an opportunity to buy back in after the correction at much better prices. So I congratulate everybody who, like us, they made money on the FOMC statement within 24 hours. It has been extremely profitable to capitalize on this volatility. If you're not making money at the moment, there is seriously something wrong with your trading approach. Either you're inexperienced, or you're just using technical analysis, or you'll just keep getting chopped up in the market, or be death by 1,000 cuts. And what will happen is that you'll miss out on these life-changing opportunities to build wealth during this current super cycle that we're seeing, where you've got inflation running at 40-year highs. The Federal Reserve have now increased interest rates, which is ultimately bullish for commodities and bullish for gold and silver. If you are only trading technical analysis, it gives you absolutely no edge at all. You want to be utilizing data, statistics, market intelligence. Understand the capital flows in the market. Learn the daily, the weekly, the monthly, the quarterly cycles for each commodity, alongside that key areas of liquidity, the intermarket correlations, the ratios in the market. Understand the fundamentals, the geopolitics, the macroeconomics, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.